Hi, everyone. Welcome back. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals. Today, I'm rolling one of my bull put spreads and opening a new position, leaving two spreads set to expire tomorrow. Since opening this account in September of 2024 with $1,500, I've grown it to over $2,800. Along the way, I've had to make some key decisions about how to scale up: wider spreads, more positions, or more contracts per trade. I'll walk you through my thought process, what's working best, and how I'm managing risk while growing the account. One of the biggest lessons I learned while scaling up is that more positions don't always mean more profits if they're too hard to manage. I tested a few different approaches and found that managing about 8 spreads at a time is my limit. It keeps things balanced and gives me enough exposure and ensures I can roll positions efficiently when needed. My current account value is $2,729.26, and $2,778 of that is cash. My option buying power right now is almost $1,200. And if I look over here at um, this column, the BP effect, the buying power effect, and scroll down, you can see that $1,600 of my cash is currently being used to secure puts in this account. When I first started trading, I had $1,500 and I started with 4 spreads, each putting $200 of capital at risk. And as I have grown my cash balance, I've also increased my number of positions. So most recently, I I had a decision to make because I had 8 positions open, each with a $200 spread. So I was using $1,600 of capital, but I like to use about 2/3 of my capital to secure these trades. So I wanted to expand a little bit, and I needed to decide whether I would increase my number of trades or increase my number of contracts or increase my spreads. And what I ended up deciding to do was keeping 2 spreads on each underlying ticker and increasing one of them to a $300 spread. So, like right now on QQQ, I have two positions open. One of them is a $508 spread that is secured with $300 of cash, and the other is a 506 spread. So I have $500 devoted to QQQ. And I was doing the same with SPY, but I recently closed the $200 spread. And with IWM, I have a 300 and a 200. And gold, I shut down one of these recently, and the price of gold has increased so much that I was hesitant to open another bull put spread, but I have some cash available, so I need to decide what I'm going to do today. So that's sort of a long introduction to if I have almost $2,800 available, I am wanting to keep about 900 or 950 in cash. Oh, and a quick side note. If you've been following these videos and want your own structured step-by-step guide to bull put spreads, I just published Beginner's Guide to Bull Put Spread Options on Amazon. That's actually why I didn't get a video out sooner. I was deep in writing mode. This book breaks everything down from setting up the trade to rolling and managing risk. So you can trade these spreads with your eyes wide open. If that sounds useful, I'll drop a link in the description. I want to roll something out that's about to expire and decide on a new position today. So let's take a look at this $200 spread on QQQ. Right now, the short put is worth 350 and the long put is worth 250, meaning I would need to pay 350 to close this one and I would receive 250 to close this one. So I'm going to see if I can roll this one out to a new $200 spread expiring later than the February 14th spread. I'm going to look out 7 days and see what I could find. All right, 512, 510. This looks like a good combination. It'll bring me about $12 less whatever I have to pay to close the existing position. And it'll keep a $200 spread with uh, less than 11% chance of going in the money. So I'm going to roll it out to February 18th at 512 and 510. That one does not seem to be filling, so I'm going to leave it alone, and it either will or won't by the end of the day, and I'll deal with it tomorrow if I can't get it to roll. But it'll probably just expire worthless tomorrow, so I'm not really worried about it. SPY, I have a $300 spread open right now, so I'm going to look for a $200 spread, a new one. Let's try 589, 587. Okay, that one just filled at $11, so I'll add 968 to the spreadsheet. So that's a very solid 252.37% annualized return on $200 of capital over a 7-day period. I would like to have a position on gold. Let's just see what I can do here. I really don't think that it's worth paying even $1.67 to close this because it is almost certain to expire tomorrow and just disappear from the account and free up $300. So instead of paying to roll it or close it, I'm going to take the very, very small risk that the price of gold will drop precipitously and I'll lose $300, but I think that is just really unlikely to happen. So let's look out to February 19th and I'll just look for another trade. A 259, 256 spread puts $300 of capital at risk for 8 days and will bring me $15, so probably $13.68. Let's see if I can get this to fill. I don't know if it's going to fill at 15. I'm going to put the order in at 14. It filled here at 14, so I'll put it on the spreadsheet, and that does reduce my available capital here to $700. And even though I am pretty certain that this other gold position is going to expire tomorrow, and the QQQ position I have here is also going to expire tomorrow and open up another couple $100, I'm comfortable keeping $700 cash available and hoping those other two positions take care of themselves before the end of the trading day on February 12th. My cash balance is just over $2,800 now, and I still have $700 of available cash in case I need to repair anything, and I have two way out of the money positions that should expire worthless tomorrow and free up more capital. That's it for today. If you found this helpful, hit the like button and subscribe for more real-time trading updates. Let me know in the comments if you've had to adjust your approach as your account has grown. Thanks for watching, and I'll see you in the next one.